Good morning and welcome back to the Opportunistic Trader for September 4th, a Tuesday. I hope everybody had a great long holiday weekend. Over here in Florida, we didn't see the sun too much. I guess that remnant of the hurricane rolled through, and we spent most of the weekend inside, but that's okay. It was still a nice weekend, and I'm joined by Vince.
Good morning.
My alter ego, or whatever
he wants to say sidekick, but he knows that I'm better looking than Jim McMahon or Vince McMahon or whatever the fuck his name is.
Vince McMahon.
I'm thinking of the quarterback, Jim McMahon, whatever.
Ed McMahon. You had the head of wrestling, and you had the QB for the Bears. You're starting out good this morning, Vince.
Eagles, not the Bears. Eagles, okay?
What do you mean Eagles?
Bears. The quarterback for the Eagles.
Bears, the Super Bowl.
Yeah, I know. We got him when he was dead. We got him when he was about to retire, I know, but he was still cool. We recognize coolness.
You're calling him an Eagle. I love that. That's a true fan. But
that's when he was wearing those headbands. It was funny stuff.
That's so funny. So anyway, Vince is with me. I want to just quickly recap last month, which was very, very bullish for the equity markets, especially individual names inside the FAANG. The FAANG has been, the strangest thing to watch, and it's even so this morning. You have Amazon up 7, Apple up 50 cents, and every other FAANG down anywhere from 0.5% to 1%. So it's this thing now where these computers are buying inside the FAANG. You just have to figure out which one they're buying. So
they're rotating within, whether it's because dollar cost adjusting or because of news, who knows? But like the FAANG is the market now, sadly.
Yeah. So and this bull run is really for stocks. Apple had an unbelievable month last month, up about 20% for the month, which is epic for the largest stock in the world to.
Coming out with phones with new colors, Larry. So your short was definitely wrong because you were short because you didn't expect the colors to matter. But colors matter.
I was shorted. That was that was one of the few losers we had for the month. But you know what? It wasn't so bad. We used the stop, and thank God. That's what we do on all our trades. And
shocking discipline. Shocking. How dare you?
Exactly. So we used a little discipline, but overall equities were higher. Oil was the interesting trade last month. It was down for the entire month until the last basically week of the month, and rallied and closed at a 6.5-week high. And now, because of the hurricane, is even higher. The trade that we had over the weekend or over the holiday was short S&Ps. It was a nail biter. We were able to stay in it, and the market came in this morning, and we covered the short in here where we're trading now. So we had about an $8 profit on that trade. It worked out pretty well. So it's a good start to the month. Looking for ideas. Today is an option expiration, so we will look at that in a little bit. Let's talk the world. So we can talk starting out in China. Shanghai was actually up over 1%, which is bucking the trend of the world. Nikkei was slightly lower. Hang Seng was slightly higher. And then looking at European markets, I think that's where all of the shame in the game or the pain in the game is coming from. You have these markets traded overnight. Yesterday when we weren't trading, and the DAX was about 30 lower. Now it's about 170 lower. So
if I could just break in, add a comment.
Sure.
That gives a little explanation. This is the DAX started selling off harder on bank issues, not just Italian but Spanish banks as well. So the DAX seems susceptible to the downside to bad banking headline news, which is consistent with what we were talking about.
Yeah, I don't know exactly which banks. I don't know which countries they're using, but that market's traded very heavy. And, going back to last month, and Vince, you wrote a great article over the weekend, which everyone should read, basically discussing the divergences in currencies and markets across the world. And I've never seen, since I've traded, divergences like this. You have the Chinese market down 20, and you have the Nasdaq up 20, and
Right.
that's just a massive swing. You have the DAX down 6 or 7 now, or maybe even 8. Our market up on the S&P about 10, 9.5, and these divergences are amazing. And I guess maybe it's tariff stuff. Again, thinking that we're going to win the game and we're the biggest player and we can control everything. And maybe that doesn't turn out as good as people would like it to. And to throw the caveat in here, I mean, we've been really looking at volatility. We've been focused on it. We see something here that looks different than the other times, which it always looks a little different than the other times. But we have a September volatility at 14.5 on the futures, and going out to this, it's basically up to almost 16 and change. So they're expecting something before the end of the year. If we were calm waters, smooth sailing, these vols would be flat across the curve and lower in general. So, I know you looked at that, so I didn't know if you had a feeling on that or what clues it's giving our trading community.
Yeah. First, I think it's interesting. Those of us who look at, before I get into specifically the volatility, those of us, what's interesting to me about the divergence in equity markets is usually, not always, but usually you'll see a strong stock market on the back of a weak currency, kind of like an inflationary proxy. But what we're seeing now is countries move with their currency. So strong dollar, strong stock market, weak yuan, weak Chinese stock market, which is a difference than what we saw, say, in Brexit, when the British stock market, the FTSE, rallied on the back of a significantly weaker pound. So I just think that that's something to note, that countries' equity markets are moving in lockstep with their currency. And as a comment on the lack of liquidity, probably in large part because of QT as well as the tariff stuff that you mentioned. With regards to volatility, you have been focusing on December and as your proxy. I wanted to do that, but I wanted to go apples to apples, and I went second month out on the VIX versus second month out on the ES. And before today's move, before today, there was basically I think I put down a 20% increase in volatility, in implied volatility. Now versus implied volatility the last time we made highs in January. And on top of that, after the first weekly sell-off in February, we'll call it, volatility still remained under where it was bid yesterday with the market at all-time highs. So to your point, either A, something is going to happen, B, people are remembering what happened and weren't hedged for it last time, or C, something we haven't thought of yet. I would tend to think that something is going to happen, and the question is, have enough people hedged to stem any swoon lower, or is the fact that everybody's buying puts now a sign that not enough people have hedged and it's going to be even worse if we sell off? I don't know. But, as a person who plays long and short vol, speaking about you, I suspect, just trying to put myself in your head, you probably would be looking for the market to move because of the implied vol, and then at some point trade the extreme of a move perhaps by selling that implied vol or by trading the futures around it. I mean, is that what you would be thinking
Yeah,
possibly?
I mean, I like to, depending on, I always do short dated, and I try to hit the month or the day or the day of the week that's the closest to expiration, which I've explained. And, I like to, in this environment with a little bit higher volatilities, sell some put spreads, a little bit out of the money, and then
Right.
trade futures around that, utilizing
Right.
a bias to the short side. It hasn't, it hasn't been easy, and it's funny. I was speaking to my partner, and what's interesting is we talked about last month and our trading and our bias, and we had a nice trading month. And what's interesting is we really traded it mostly to the short side, and the market
Right.
was up pretty good. So what we're good here at doing at the Opportunistic Trader is being able to, like you say, a little bit counter trend inside a trend, and capitalize on that, as well as capitalizing a bit on the trend side.
Right. Recognizing your bias and being able to make money knowing that bias,
Yeah,
even when the bigger trend is against your bias, it just sets you up for the home run when your bias is right.
yeah, and we're seeing big moves in oil. We're seeing big moves on the S&P last month. The stocks, and I would say that our equity chat room has been really, really good on these FANGs and just on top of the market. And there was a lot of good stuff going on in the equities for the month. I'm hoping to see the same thing again this month. I would have a bias to be short some of the, even though it's scary, the Apples and the Netflix and the Amazon, maybe expressing it in option terms, but the moves there have been extremely large, and I don't know if they're sustainable. Looking across the board, I'm looking at Tesla this morning under 300. It makes me laugh because Elon Musk is just shot. You'll never hear
Right.
from him again. What's
Right.
amazing, and I think we talked off air about this, is that he made comments that the financing was in place, and he really never had any financing. And he actually went out with, on Twitter, publicly disseminated and gave out false information. So I don't know how he's left standing, but that's, I guess, for another day to look at. But
I made a joke that day, Larry, on Twitter that here comes the Ambien defense, and he actually made a comment to that effect. It's unbelievable, the denial and the arrogance that some people have. He's no longer made of Teflon. That's the bottom line, and the question I think now is for traders in the equity room, and I'll throw this out there. Without Elon Musk, does Tesla trade higher from here or lower? And that's, I think, a question worth looking into.
yeah, I don't know how fast you're getting rid of him, but if the SEC comes down on him, maybe faster. But maybe again, I don't think he's the reason for the whole company for sure. And the product. Listen, you have BMW, Mercedes, and Lexus, and a number of players that are entering this space, and they have unlimited wells of money.
Right. Tesla does not have a protective moat around its technology. They have a salesman who is human like everyone else and is making mistakes.
Yeah, I mean, listen, I don't think I would get that car, but that that's just me. So
long the car, short the stock is what I hear.
Oh, really?
But can you actually get the car is the question.
I don't know. I never tried, but so we'll keep an eye on that. That stock's trending towards the low of everything that's gone on here, and we'll see how that looks. I mean, that stock looks like it wants to go into the middle twos, like 250 area. So we'll see what happens. But looking back on that, it was very interesting. The ARB, the ARB on there was really weird. On the day he announced the 420 bid, he basically left no room because the stock was 380. So,
Right.
but ARB's, I was saying ARB's can't even.
He capped the stock at 420 also. I mean, that's part of the deal.
Yeah, he capped it, and he basically now can no longer talk about it. So we'll see, but we'll keep an eye on that this month. I wanted to go back to something that we were talking about last month a little bit, and you mentioned as well off the air is the FXI, the large China cap stocks, and our bias was to basically try to be long that and maybe short some S&P. Obviously hasn't worked. We haven't put it on, but it's something that's on our radar. And I don't know what your thoughts are on the large cap China, the Chinese situation, and where we're going to go, from here.
I don't have the granular point of view that you do. I do have a strong macro opinion, and that is short the West, long the East for a 20-year time frame. So if you're looking at 529 or college money, I think buying India and China are it's a sea change, and no matter what the obstacles are, no matter how much they mess up their own situation, the sea change is there. And I'm not saying short the S&P. I'm saying if you're an American and you have an opportunity to put money in to China or Eastern bloc countries, including India in that, you should do that. When I say you, I mean me. You should think for yourself, whoever you are. But on a short-term granular basis, I see China's index as a slave to the yuan. And on top of that, if they had that problem solved, which they seem to be solving, then they have the problem of deleveraging. If they go back to deleveraging, then they risk default on the corporate side. I see other problems for them in the short term, but I have no feel for that as a trading product. So I would leave that to you on that in that area.
Yeah, I'm not doing that trade for 20 years. 20 years is
No,
I'll be in a walker probably at that time. So
yeah,
if that trade doesn't work in 2 years,
no,
I'm dead. But
no one can say you're wrong though. And it's like, see, he was right.
Exactly. It actually just flashed some prices into my head from 2009, which wasn't even 10 years ago, 8 years ago. I mean, we bought millions of shares of Bank of America in the $2 range. Las Vegas Sands was trading at $1. I could scale you with 50 names here, but it's funny. It brings to mind we used to have lunch with.
If you start talking about Amgen and Johnson Matthey, and J&J, you're going to scare away our Google people.
Exactly. But I had a quick funny. So
Go ahead.
we had a gentleman, an older client, in with us for years in our family office business, and we used to take him to lunch every year, and he basically, I was talking to him, and I was like, listen, we're going to take this really, really slow, we're going to invest, and, this and that. He turns to me and he goes, son, the only thing I don't have is time. So going back to the 20-year point, the max time that I'm giving anything is a couple of years max. I mean, we don't trade that way, but to position. So, we're looking for that kind of trade to really work, within the next year to 2 years. But I get it. But that is a true story, and I won't mention the gentleman's name because he happens to be a pretty well-known guy out there in the world, and And
Take risk, but I want it in cash, and I want it back to me in 2 years. Damn it!
no, he had nothing to do with risk. He had to do with time. He's in his 80s, and he's like, listen,
Right.
son, the only thing I don't have is time. So listen, it's funny because in this game, timing is everything, and that's what we're hoping to do here is show the landscape to people, show them what we do, how we do it, and basically, I feel lucky, to have all of the experts in the different spaces that can cover me or us in areas that I'm not as versed in.
It's nothing. There's no substitute for getting healthy feedback on an idea from someone next to you on a desk. Hey, let's say, for example, I'm looking at gold. I'm bullish gold. Maybe I should just buy the Mexican dollar. It'd be nice to just turn to Greg and say, hey, I like the Mexican dollar. What's the pair on that? Instant feedback on corollary assets and cross-asset trading are what makes banks like Goldman, so successful. And I think that's something to not be underestimated in the chat room.
Without a doubt. And for me, myself, it gives me the time to focus on what I think I do better, which is one or two markets, rather than trying to be an expert currency trader when I already have that. So, what we're trying to do here, and what I think we've done, is create the macro fund effect, where we're all pretty much trading, and we're providing those ideas through the global landscape. So, it's interesting, and it's been, it's last month was a good month overall. We got some great ideas, and that's what we're going to try to do, is give information, ideas, and plans for people to look at, and have the ability to have what I call the edge, from the morning notes all the way through, the end of the day. It's I think just a real value add, and we're going to continue to do that. And overall, markets firmed up here a bit. S&Ps are down only $4. The Nasdaq's down 19. I like the short Nasdaq, long S&P trade coming into the month. I don't know how well it'll act today, but I think that even if the market gets soft, it'll be more soft on the technology side, because it's had such a good run. I expect that spread, which is a little bit over 10%, to narrow between the markets. Right. And that's an idea that we'll keep an eye on. Back to bonds, which we have rarely talked about because they're just a chop city. They're down.
But we have been accurate in handicapping the Gunlock effect. Everyone's short bonds, and then bonds did rally for a couple days, and then after that they sold off. So we are identifying a correlation in when someone speaks versus what the market will actually do. Yeah, tons of people are short bonds, and they're not really wrong right now.
No, it's sticking around 287 on the 10-year. Not been above 3, maybe for a day. For a minute, it was above 3. Traded down to the high 270s, and overall, we're heading back the other way. They were down a little bit more this morning. They firmed on S&P weakness. S&P has rallied. Basically, I think the low this morning was 92, trading at 98. So they, the vol has actually come in a little bit on these day options. They got a little squirmish when we were down there. Bids were coming in, and now we've settled in a bit. And, I'm expecting much better trading. And I think we're going to have a back and forth in here, and we'll see what happens. Looking at Facebook, looks a little weak. It's trading at 173.90. If it breaks 170, we could have some downside there. Don't see much, but that's by me looking at it every day, that's sort of what I see. And overall, I think we've covered pretty much everything. I mean, oil, we could talk about.
I think we should talk hurricane and oil, and the fact that could be something nice to trade today.
Yeah.
I know you want to touch on that.
Yeah, I mean, I sort of saw what blew through here. Didn't look so bad. Um, market reacting. What's interesting is the market opened Sunday night because futures traders don't get off the way equity traders do. So we had a
Right.
market open on Sunday night, and oil actually traded about 50 cents lower. And I was sitting thinking, this is weird because there's a hurricane in the box, heading towards New Orleans. I mean, I don't think it's a big in any way, but it usually strokes some type of up movement, and then in the last basically day, it's gone up about $2 from the low, and I
So,
guess
question for you before you get into the analysis: do you think, and you may not think, you may not discount this at all? Do you think that the hurricane news, may itself be overblown as it's reacting to crude, but that crude wants to go up because of other factors and is looking for an excuse, whatever it be, Iran or supply issues or what have you?
yeah,
In other words, fade the hurricane
I would
or buy the dip.
I would look to be selling up in here at some point. You run a risk of more sort of BS stuff coming out of the hurricane, rig evacuations. But I think that blows through today, tomorrow, and then we'll see where we are. But as one of my close friends that I traded with for many, many years says to me,
Is he deceased?
he is not. He is
Okay.
no. He is hiding in Aspen, Colorado. I won't say his name, but living the good life. But he's probably one of the best traders that I know, and I'm hoping to have him on the site to do a webinar at some point after he runs the triathlon in Kona.
There you go. There you go.
But anyway, what he always says is, you gotta watch the computer. The computer in oil was for sale for 5 weeks, and now it's the second week of buy, and we're higher than we were in the last 5 weeks. So, we're in interesting territory. I do think it could be a trading short at the 71 quarter or higher level for a trade. You might endure a little bit of pain. I would be smaller on the size and use a stop maybe 75 cents away from the market. Look to take maybe 40, 50 cents on that trade on a counter trend. But right now, really the focus is, for me is S&P. They look interesting here. Friday's action was really weird. I mean, maybe it had to do with month-end marking, but the S&P was trading around 28.95. We were sort of getting some news headlines that they weren't going to do the NAFTA deal. And then when they came out and said, they're going to keep it on the table, the market rallied like 10 handles. And my thought is, what would have happened if they signed the deal? We wouldn't even have rallied that much. So
Right.
that deal is not happening anytime soon. Trump has gone and basically angered the Canadian country.
But which only strengthens their bargaining position. They're going to sign, but they have time. I mean, you and I have discussed this. I'm not underplaying Trump's ability to negotiate. For all I know, his off-the-record tweets could have been put out there intentionally to the Bloomberg guy just as a proxy because the Canadians were already in the U.S. The bottom line is, if you do the math, he needs congressional approval, and September 30th is the deadline. So something's going to get done. I mean, let's face it. The longer this goes on, and the worse the EM in Latin America currencies go, the more interested Canada is in doing a deal with us. That's it. It's going to happen. As long as we protect the maple syrup mafia and whatever other dairy farms they need protected, they're going to sign a deal with us.
Yeah, listen, they will.
That's my opinion.
Yes,
feel free
they
to
will.
tell me I'm wrong.
No, they will. It's just, a matter of, they've taken the ultimate pain to this point. I mean, dealing with Trump and taking the heat. So they've taken the heat. I think they're going to try to do a good deal, or
Yeah.
And Trump just
It's all
wants to
egos
do.
now. I mean,
Trump just wants to do a deal. He doesn't even know the deal
right,
he wants to do. He just wants to do a deal.
right,
So,
right. He's a poker player. He got someone to fold, and he's rushing to get the other guy to fold before Congress says no. It's really no different than the whole civil rights stuff he did with the U.S. court. Doesn't mean it's a bad idea. Tactically, I think he's transparent, but strategically, I think he's in the right place.
that brings me to the bigger point, which we don't do on our site at all, is talk politics. But I'm not talking politics. I'm going to talk election. I think that's the big wild card. I think they get wiped. I just think.
Wait, who's that? You mean the Republican side?
Yes, I just think it's going to be, he's going to have control of nothing, and the next 2 years after this are going to be talking about impeachment and having nothing done, which, generally the market likes in general, but it could become a little bit skittish.
Oh, yeah, no doubt. You can have a Democrat House, and, we're talking politics, but let's put the phrase on it that makes it okay to talk it on a financial website. Geopolitics, macroeconomic policies. And the bottom line is, you're right. He could walk in. He could get reelected. I mean, who do the Democrats have to put up against him? He could get reelected. A Fern might win versus whatever Democrats put up, just because the people don't want the Democrat. Meanwhile, on the House and Senate side, he could lose. And so you have a second-term president who's hamstrung at best.
I mean, that I think is a big wild card coming into the election season. So, that should boost volatility and change the complexion of what's going on here. But again, that's ways away. That's nothing to even look at for today or this week or next week's trade. So exactly. we're focused.
But it does affect the fiscal policies that we are talking about. Congress may not agree with Trump and delay something for 90 days because they know they're not going to be there next session. So these things do matter. Maybe not today, maybe not tomorrow, but they matter in a long-term bias. And, I know that you look at things like that.
Yeah, for sure. So that'll be interesting to look at. And overall, the biggest mover, I think, even last month, is the currencies. And today, in about 15 minutes, Greg will come on and discuss his positions in currencies, his thoughts, and sort of a brief overview, which I think really ties into a lot of the reasons why we're moving, both on the equity side and potentially on the commodity side. So it'll be interesting to hear from Greg at 8:45, and then at 10 o'clock. Yeah, and then at 10 o'clock from our equity room, and a really, really good equity talent. Tony Greer is coming on at 10 o'clock to talk, again, his positions, his thoughts on individual named equities and, thoughts on the market. And then at 1:30 today, we have Adam Collins, who discusses the commitment of trader data. And he's really gotten a great response in our room and just across the board from people that have seen his work. He really parses out positions, sees where people are or firms are long and short, and comes up with really good ideas to capitalize on that stuff. So it'll be interesting to hear from him at 1:30, and that's the schedule. I'll be on a number of times during the day. I feel like today will be a busy trading day, so I'm going to hopefully be active. Last month was interesting. I had days where we had 7 or 8 trades to give to the chat, and then some days it was literally just looking for one trade. I'm not expecting that this month. I'm expecting to be a bit busy, so I'm hoping to give out a lot of my ideas in the marketplace. And let's just touch on gold, which is trading around 1,200. Quick thoughts on that, and if you have positions or levels that you may want to look at.
I do. First, the Opportunistic Trader headline for gold, in an homage to the mainstream media, is gold is lower because of the hurricane, as Spanish galleons have been dredged up and there are doubloons for sale everywhere now. Okay, bullshit aside, gold is lower. Gold is now on the edge of breaking out of an important range. I am not just speaking technically first. All right, my levels have been and continue to be 1201. We're talking basis Dece. Below 1201, 1195. Below 1195, 1189. Below 1189, 1180. Below 1180, put on a scuba mask. We will probably touch the lows. On the upside, if we do reverse, every rally is a sale into the teens. In the mid-teens, consider covering. Only above 1220 on strength does the market continue to trend. Now, I speak as a trending trader. Every number I give you is a number that you should consider fading. I'm not telling you to fade it. I'm telling you to think for yourself. But here's where I am today, as it exactly appears on my radar today. All right, gold has given a 4-hour signal lower. I missed it. I missed my entry, but the entry would be short now, short at, say, 1201 with a stop at 1203, which is a very tight stop. But you're looking for profits in 4 to 8 hours. 1201 short, risking $3, you would look for a $6 profit. Here's the big deal that people should pay attention to. If they're looking at gold, not if you're looking to trade gold, even if you just look at gold as an emerging market in and of itself, it is down with emerging market currencies. It is not up. The failure of foreign fiat is not bullish for gold. Period. Stop thinking that if you are. It will only be bullish for gold until they've all sold their gold to the IMF. That said, below 1195, this is a technical comment, not a volatility system comment. A very sharp technician that I use, someone who charges $5,000 a month for oil and gold. I'm not plugging him here. I'm just saying that's how good he is. He says below 1195 on decent volume, we have a, quote, resumption of his bear calls that called us down to 1167. So I would say you want to be a buyer. If you're a technical trader, you want to be a buyer above that and flat below that, and then go home, possibly go home short. When I say you, I mean me. Go home short below that. I have missed the signal, so I will not be trading it. I'm actually more focused on oil today, looking for a level 2 fade or to trade it. But does that answer any comments on gold that you may be
Yeah, I mean, yeah, a bit. The way I'm looking at gold, and again, I'm not the gold expert, you are, but I kind of think in a way it doesn't trade right, but considering the movement in the dollar and how strong the dollar has gotten, maybe it's not
Right.
that bad down here. So, maybe it levels lower than where we are now. I don't think we're going to get through the low.
That's not an invalid point. We could go back to 1140 with the dollar here, and yet we're not. And I know I'm cutting you off, but
No,
if you look
fine.
at gold, and this is just really to underline what you're saying, if you look at gold relative to its other precious and semi-precious brethren, it has held up better, and that is because it is benefiting from the foreign fiat debacle. Not necessarily saying people are buying it, but there are less people selling it than before. Gold is trading 1194, silver's trading $14 and change. I mean, that's a huge difference in valuation, and that's because gold is money, and at some point it will become important, if for nothing else, as a hedge for foreign, currency exposure.
Yeah. All right, so we'll keep an eye on that. I'm looking at the regular gold. These futures are trading at 1,200, so that's what
right.
I'm reffing when I'm trading. So, maybe if it gets down a little bit more, look to buy. Oil looks extremely strong in here, about $1.40 higher, nearer the highs, obviously, of the day. Looks like we'll probably take the highs out before the 9 o'clock opening, but we'll keep an eye on that. And overall, I think we have everything covered. Looking at the straddle quickly, the 2900 straddle is pricing in actually pretty low, about 875, which is really low. It was bid about $10 about an hour ago on the at the money straddle. So vol on the daily basis has come in a bit. So we'll keep an eye on that. And overall, I think we got everybody set up for a good trading day. And Greg will be joining us in about 5 minutes to go over currencies, and we'll be fully covered. And I'll be back before the opening and in the chat room all day, as well as you. So I appreciate it, Vince. Any other thoughts?
Larry, before we go, we should throw the data and headline risk out there today. We have August PMI due at 9:45. The ISM gauge is at 10 a.m. Auto sales, which are always for some reason important, are out for August today. And the IMF is speaking with Argentina. So you've got headline risk on the EMF side, on the currency side, and you've got some headline risk on PMI, maybe some surprises. But other than that, I think we're ready.
Okay. Listen, everybody have a great day, and we'll be hearing from Greg shortly, and then I'll be back to you before the opening. Thanks again, Vince. I appreciate it.
Thank you, Larry.
Have a great trading day. See ya.